In today's video, I'm going to show you the complete execution process from trade idea to entry, trade management, and exit. This is the ultimate guide to executing trades perfectly. My name is Luke Burton. I'm the co-founder of Not Just a Trade. I've been trading the Forex markets for over 7 years, day trading Euro USD only for the last 4.5 years, executing on the 1-minute chart. Let's get into today's video. So there are 4 parts to every trade: the trade idea, the entry, the execution, and the management. We're going to go through each part and understand exactly how to execute each part perfectly so that you can get consistent results from the market every single time. So firstly, the trade idea. Every great trade starts with a great trade idea, otherwise known as setups. That's the market showing you an edge, showing you that the odds are tipped in your favor. If you was to look at the market without trading and just imagine that it's balanced, when you see your setup, the scales are tipped in your favor. So we always want to see the scales tip in our favor before we trade, because that's what gives us the consistent results over a series of trades. So let's have a look at how we build the trade ideas using the NJT concepts. So we use 4 main concepts to build a trade idea, and these are RAMC. This is a bullish or bearish order flow pattern, which shows us the intention direction. This gives us liquidity targets, and we also pair this with the breaker structure, which shows intention. So you can see on the chart right now examples of RAMC. This is where the banks create their orders. They create them in the sideways range. They initiate price either higher or lower. That shows the intention of higher or lower prices. So when we come back into that range in the future, then we can play that intention again when the lower time frame also shows us the same price delivery. That's how we build a narrative for either higher or lower prices within the market. Number 2, trading location. Now this is really important so that we can make sure that we sell high or buy low, and this gives us the best opportunity to make profit from a trade. We also split premium and discount into higher prices and lower prices within the whole price range. And we always talk about trade location and we think about an A to B price range. And then we have our higher prices and our lower prices within the market. This takes into account the price on the right-hand side of the chart and gives us great locations to take trades. Number 3, market structure. Understanding whether we're trending, ranging, or in initiation structure, because all of these can be played different. A lot of people only trade the trend, so they understand that when price is trending, that they look for those pullbacks and continuations. You can also have different processes for different market conditions. For example, if we're in a sideways range, you can play the market from good locations using the location concept to make sure that you're buying low in the range or selling high within the range as well. A lot of traders say stay away from a sideways range, but once you understand how to trade a sideways range, it's actually one of the most fruitful ways to trade the markets, especially if you can catch that initiation phase in the market, which always comes from a sideways range. And lastly, this is one of the most important concepts, trading with the higher time frame trend, higher time frame momentum. The lower time frame is always going to build price delivery in the direction of the higher time frame bias. So it's really important to understand the higher time frame direction and to trade alongside that direction. And that's how you're going to get a lot more winning trades in the market. So these 4 concepts, this is what we use to build high probability trading ideas. It's really important that your trade ideas always follow the same processes. That's how they can be repeated. And that's how you can gain consistent results in the market with your system as well. These concepts are based on the facts of the market. These are not just our ideas. These are actually based on how price moves, where the banks create orders in the market, buying low and selling high, which is a basic concept, and trading intention within the market as well. So now I'm just going to show you examples of how to build trade ideas using those 4 concepts on the chart right now, so that you can have an understanding of how we use these concepts to build these trade ideas. So now when we're down onto the lower time frame on the 15-minute chart, this is our intraday chart. This is where we're going to build our trading idea based on the other concepts, which is the RAMC, the trading location, and the structure. So when we're thinking about structure, we can very clearly see that price is in bearish structure. We can see that we have a lower high here, lower low, lower high, and a lower low printed in the market. So this gives us our A to B price range, and that gives us higher prices here and lower prices down here. Now, when we think about our A to B price range, all of this here in the middle, this is the middle of the range. This is where we want to stay away from. This is the high prices here, and this is the low prices, which is the top 75% and the bottom 25% of this A to B price range. So when we're looking for RAMC, which is the next concept that we're using to build a high probability trading idea, we're looking for ranges that are at high prices within this A to B price range. Now, Ranges can be either that sideways price delivery, which will be very clear and obvious, like we see here, prices contained between this high and this low, very clear sideways range within the market. Or we can get candles, right? And a doji candle is a representation of a sideways range, which again is exactly the same as what we just looked at here. It's a representation of a sideways range. A doji candle is a lower time frame range where prices contained between the high and the low. And then we see an initiation to the downside, which is that aggressive move here to the downside as well. It's a representation of range and initiation. So we know that if we come back to this point in the future, we can anticipate price to react, zoom in on the 1 minute chart at the point of mitigation, and then we can trade the 1 minute continuations away from this location in that continuation phase of the market. So now I've just plotted on that area with the range where prices contained between the high and the low before initiating to the downside. This is going to be the area that we're going to look at during the session for price to come into so we can play continuations away. Now, just before I get into the entry, let's recap the trade idea, right? And think about how this is high probability. Higher time frame, which is one of our concepts, is bearish. We've seen that from the higher time frame. The structure is also bearish. We have an A to B trend continuation at the moment. We've put our location tool on, so we make sure that we're selling at high prices within this A to B price range, which gives us, again, the highest probability locations within this A to B price range. And we're trading a sideways range that is at high prices within this sideways range as well. That is a lot of confluences in our favor. That is a lot of odds stacked in our favor before we even get into the entry. And now the entry that we're about to go through now is stacking on an additional layer, because we've understood the direction of the market. We've understood a great location in the market. When we go down to the lower time frame, we see the same bearish price delivery. That is the market showing us it wants to move lower at a location that we expect price to move lower from. So now all we need to do is make sure that we focus on part 2, which is the entry. So we're down on the 1 minute chart. Obviously, I've just zoomed out so that you can see the 15-minute chart from the 1 minute chart. When we go down to lower time frames, so for example, if we start on the 15-minute chart and we're going down onto the 1 minute chart, all we're doing is zooming into this area. And that's the perspective I always look at the time frames from. I'm zooming into lower time frames, or I'm zooming out to higher time frames to get a perspective on the same data. So now that we have our trade idea, we're down on the 1 minute chart zoomed in so that we can look for our same repeatable price delivery, that range, initiation, mitigation, continuation price delivery, so that we can look to get involved in bearish order flow at a point of mitigation. Now, it's important to understand that all these concepts come together with a logic and an understanding, right? We're seeing bearish order flow patterns, which is what moves price lower. This is how banks move price lower and create volume to the downside at a point of mitigation where we anticipate that price may turn around and see a continuation to the downside. So everything that we say and do and all the concepts that we have are all backed with the logic of how price has to move to create direction in the market. So now let's zoom into the lower time frames here. We're going to be looking for this repeatable pattern at this point of mitigation and then seeing how we can execute this perfectly. So I'm just zoomed in now. Obviously, we're going to bar replay this. If this was in live time, I'm going to show you how I'll be thinking about the charts as it's printing. So we're seeing right now price is bullish moving into this location. So right now, we haven't seen any sort of momentum shift. We haven't seen any sort of bearish structure or bearish initiations in the market or new ranges being created in order for us to change our direction in the market. So we can see here, this is what we look for, right? This one candle shows imbalance in the market, which shows aggression and speed in the market. And this is what moves price, right? Every time price moves higher or lower, we can see the aggression and speed in the market. And that's what's driving price higher and lower. This is the banks aggressively buying price. This is the banks aggressively selling price in the market. So this is what we always look out for at points of mitigation. That shows us momentum, either to the upside or to the downside. So when we get that aggression and speed, like I said before, if you watched our ranges video, if you can't find the range, find the initiation, go back, find the highest point, find the lowest point, and that is your sideways range in the market. So this is sideways range, initiation. So this is exactly what we'll be looking for. Now, when it comes to execution, and this is really important, there's two parts to the execution, right? There's seeing the pattern and that repeatable price delivery that I just spoke about, the RIMC. And the second part is the actual execution. Now, this is what quite a lot of people find very difficult because they don't have a consistent process. Now, my process for execution is I run through a checklist in my mind that ticks off all the rules for me to be able to execute the trade. Now, that's the first part. The second part is always safe stop loss. So for me, I find the high of the range here, and I go 0.2 above. And that is my execution process. I run through the checklist. I make sure I have a safe stop with 0.2 above so that I keep everything consistent within my execution process. Obviously, then the take profit is always a 1 to 10. So we'll push that down to a 1 to 10 now. And this is me set up for the trade, right? Now you can execute this in two different ways. Obviously, make it consistent. You can either set a limit order at the open of the range, or when price comes back into this location, you could trade it as a reaction and again, use a safe stop in your execution process. So let's play this forward. So this would have been the first opportunity that you could have looked to get involved in. You see, you get tapped into the trade, you get a strong reaction from the range here. Now, when it comes to actually managing the trade, for me, when we're seeing range and initiation, that creates structure in the market, right? That creates that A to B within the market. So when we get that pullback into the range and continuation, the first point of management is when price breaks this low for continuation. Because if price breaks this low for continuation and moves back up, then that's fine. The price delivery that I'm playing is the RAMC, and when it completes is when we take out this low, which is the most logical place to move my stop to break even. So let's play this forward now. And as we can see, this is a trade idea that would not have played out, and that's absolutely fine. It's about taking the same repeatable price delivery, executing the trade perfectly every single time, and then we move on to the next one. You're never going to find the perfect system in the market. You need to focus on executing your system perfectly every single time, and you will lose, right? I wanted to show you this because we do lose in the markets, but what's important is you just don't change anything. You keep everything consistent so that you win not over one trade, but over a series of trades. So let's continue. So now we can see that price creates a large sideways range here. This is a very big sideways range at this point, and we've just run the high of that sideways range now. We're still in that point of mitigation on the higher time frames. Let's play it forward. We see prices creating a new sideways range. And what do we see? Aggression and speed printed in the market. This is exactly what I said I want to see at points of mitigation. So now this is showing us, again, intention coming into the market. So we previously saw intention here. That never followed through. And now we're seeing intention again at this point of mitigation. So again, like I always say, look at the aggression and speed, go back, find the highest point, find the lowest point, and that is your sideways range. And that is your representation of range and initiation. Now, again, same process, right? Same process when it comes to the execution. I run through my checklist to confirm that this is a trade. Something else you could also do as well if you're finding that you're running through your checklist too quickly and you're very impulsive is have it written down in front of you and copy and paste it onto the chart so it's actually confirmed, and that becomes a process within your system. And again, when I'm thinking about execution now, I look at the high and I go 0.2 above the high, 1, 2. So that gives me a 3 pip stop. And again, as always, 1 to 10 risk to reward is what we're always looking for. And if you want to use a smaller risk to reward, there's absolutely nothing wrong with that. If you're more comfortable with using a 1 to 3, 1 to 4, 1 to 5, that's absolutely fine. And obviously anything in between that as well. 1 to 10 is just what we look for. We've optimized our take profit based on how many trades run into a 1 to 10, which is quite a lot of trades. And that's why we stick to that 1 to 10 method. So let's just play this forward. Obviously, we can see that aggression and speed continuing. So that is range and initiation. So now all we're doing is waiting for price to pull back here. And as we see, price pulls back into that sideways range here, which is where we expect a reaction. Price rejecting is where we get the reaction within price. Now, again, I'm not looking to manage this trade until price continues and takes out this low. That's where we could see a new intention coming into the market after this low is taken out. So for me, another part of the execution process is the management. A lot of people might see a reaction here and then move their stop to break even, get taken out, and then try and get back involved again. We're trying to keep it as consistent as possible, the execution as consistent as possible. So whatever rules are predetermined within your system, that's the rules that you need to follow. Otherwise, it's based on how you feel in the moment and what you think in the moment. And we don't need to think, right? All the thinking's already been done when we created our edge. So let's play this forward. Obviously, we can see we get that reaction here to the downside. This is where most people would look to move to break even. Obviously, we're going to follow our rules. And this is when you move to break even. Range, initiation, mitigation, continuation, taking out the low, move to break even. Now let the trade do its thing, right? There's nothing else we can do. We've executed the trade perfectly. So for me, that's a tick, right? That is a trade executed absolutely perfectly. There's nothing more I can do. Price is now either going to play out to the downside and hit the 1 to 10, or it's not, and I've executed a trade perfectly, and then I logged that trade. And obviously we'll just play this one forward. This is a trade a lot of the NJT traders got involved in to the downside as well and hit take profit on this trade for the 1 to 10. And this was an absolutely perfect trade for them as well. And as we can see, we got that 1 to 10 in the market. So just a quick recap of the whole trade. We've created a trade idea based on the concepts, and these are logical concepts, making sure that we're selling high in the market, trading from the intention, and we're using our same repeatable entry system and process to build narrative. Then we've come to the entry, right? That's where we're looking for our pattern to play a continuation of the intention that's been shown in the market. Then we move into the execution. That's where we moved on to the checklist and where we made sure that we had a safe stop loss. And then we went into our management. That's moving the stop to break even and obviously then waiting for price to hit the take profit. So these are the 4 processes that we go through when it comes to building a high probability trade idea every single time. And all of my trade ideas follow these 4 processes. And that is what keeps every single execution and every single entry absolutely perfect. And that is how you see results in trading over a series. So it's about doing this over 10 trades. Create 10 trade ideas, 10 perfect executions, and you see the result of that. And that is how you think in probabilities within trading as well. I hope you guys enjoyed this video. This is a step-by-step on how to execute trades absolutely perfectly from trade idea all the way down to execution, safe stop, and entry. And this is what we teach all of our traders to do at NJT.
This week's community winners.
If you want to find out more about how we trade the markets with precision, you can visit our website at notjustatrade.com. You can also message us on Instagram at notjustatrade. If you did enjoy the video, make sure you leave us a like and comment, and we'll catch you guys on the next video.